Is anyone able to hear? All right, great. All right. Okay, so let me just start in the interest of time. I'd like to welcome everyone who's managed to join this session. I'll try as much as possible to be quick and straight to the point. But basically, we have a lot of individuals and a lot of guys who have joined who have no idea what the financial markets are, how they work, and if you remember, most of you until Mabanga register, you had to click your skill level. So the majority of you are those who have no you don't really have any experience and any understanding on how the financial market works. So the goal of this meeting tonight is so that I can introduce you, so that you might have at least a basic understanding on what a financial market is, what trading is, what investment is, and you can have a picture to say whether that is something that is for you or something that is not for you. Okay, so I have one presentation. It's just one presentation, but during that presentation, I'll be making my demonstrations. So I'll be moving to and fro. In the afternoon, Tommy's some links on the group that you should check out. So there are some videos which were recorded in 2024. Some of the things that I'll discuss during this session will be similar. It might even be the same because these things don't really change. So it might be the same with those things in those videos. Commando, I'm not going to go into much depth and a lot of detail because I don't really want to waste anyone's time. The second thing is that I also sent my link Angapo on WhatsApp on the platforms which you have to download and register. So as we go through the presentation, you will find, you will notice that you have to experiment so that you have the hands-on experience on what I'm talking about. Otherwise, if not careful, if you're just listening and you're not really implementing, whether on your phone or on your laptop, you might forget quickly. So as I'll be going through the presentation, if you have any question or if you have need for any clarification at any point in time, you can raise your hand or you can just send a message and in the chat box. So I might respond at some point, but the easiest is to raise your hand. So the reason for a bootcamp is so that by the end of the session, you have an understanding, as I've said. It's not just about you listening and then saying that at a later point, you're going to make a decision. No, you need to be clear on where you are by the end of this meeting. These are some of the expectations during this session. I will make a bit of I'll go through a bit of a background on the psychology of money. So this is oversimplified, but basically I'm going to talk about some of the financial fingerprint that each and every one of us have. Some of the rules that have to do with money, how much money you can make, either trading or investing, and also the mechanics on how money is made. So that will be covered under the psychology of money. And then moving on from that point, I'll talk about trading and investment. So the differences between these two terms, what trading is, what investment is. I'll touch on some of the asset classes because everything that we'll be doing tonight will have to do with asset classes. So things like fixed income, stocks, indices, commodities, currencies will be discussed by the end of the session, and how to read the financial markets, whether the different the different types of strategies and all that you should be able to understand, and also how to make basic analysis as a beginner, setting up, and then we'll finalize by the end of the day. So for some of you, maybe the session might become very long, but it's necessary because, like I said, it's a boot camp, so you really have to be ready for a lot of information. A lot of information will be deposited, it will be dumped on you. There will be a lot of new things. If you had watched the videos that I shared earlier, maybe the things will not be entirely new. If you're someone who already trades or someone who already invests, then the things will not be entirely new, but you'll still gain a little bit, a different perspective on how money works, because I go deep in this concept on the psychology of money.
Excuse you, bro.
Yeah, sure.
Yes, can I request the videos? Is it possible that you can just send them on WhatsApp so I can be able to save them? The videos were too long. So
The videos were too long, the 3 videos that I sent.
yes, because I viewed them on YouTube. So
Yeah,
my
they're on
account,
YouTube.
yeah, yes, I viewed them on
Oh,
YouTube. My account is not saving.
okay, we'll see what we can do. But
Okay,
yeah,
sure.
yeah, sure.
You can
All right.
proceed.
So as I've said, if you have any question, just raise a hand. Make sure that your mics are muted. If you have another, or if you have something that you need addressed, you can also just type it in the chat box so that I address it as I go.
Uh, okay, sorry, bro.
Okay, so I'll start from here. Again, if you had checked out the YouTube video, I talked about this in great detail. But basically, we just, this slide is just to introduce the concept of a financial fingerprint that each one and every one of us has. So before I proceed, Mwina, can I just have an idea, Kuti, how many people didn't watch the YouTube videos? You can just raise your hand in the chat box if you didn't watch, so that I can have an idea out of the participants that we have now. So if you didn't watch the YouTube video, can you just raise your hand to chat box here? Okay, so I have at least 3 hands. So it seems like most of you checked them out. All right, so it seems like most of you checked them out. So I won't really, let's see, 3, 4, 5, 6. Okay, I will look at the manager. All right, I'll just go through it more fast. Know you find some time and just check it out. So basically, and to Tikamakala drama, we oscillate between 2 levels. So we are always oscillating between two levels. We can talk about, let's say, our, all right, we can talk about our income, the income that we get to bank account. What? So let's say you have a bank account with Tingoti National Bank. For bank account, if you track all the expenses and all the money that has gone into that account, it oscillates between two levels. There's a high figure and there's a low figure where that bank account is always oscillating. Now, what happens is that whenever you're making money in some reason, in one way or the other, whether you have a new job, you're being promoted, you're doing a business, and that business is making a lot of money, you can consider this. You can consider this graph as your financial or emotional level. So when you're making a lot of money, so you had nothing down here, you're making a lot of money. What happens in your mind is that you tend to be excited that you're making a lot of money. So when this money is getting higher and higher, it reaches a certain point whereby you're so excited and you're so deluded to the point that this money makes you, or it leads you into making terrible financial decisions. So if you're someone who makes, let's say, 1 million kwacha every single month, 1 million, 1 million, 1 million, and rarely, the biggest figure that your bank account has ever had at any point in time, Tingoti happens to be 10 million. That 10 million will become your ceiling. So the 10 million becomes the biggest figure that you have ever seen in your life or in your bank account. That is your ceiling. It means you never break through this ceiling. And the bottom, you can consider the bottom as the floor. So this is the amount of money that it doesn't really go below this figure. So for some people, maybe this can be, let's just say this should be like 10,000. So for some people, when they have 10,000 in their bank account, they are very broke. They have nothing. They're broke. But then this can be different for different people, different individuals. Magaizina, this ceiling can be Tingoti 100,000. So those particular individual, akakhala kuti drama, akapanga 100,000. To them, amakhala kuti account yawo yoyaona zindalama zopsa kwambiri, and they are excited. And akakhala kuti aduka, mwina ndekuti ku account kwawo kuli mwina 500 kwacha, or maybe there's 10 kwacha. For some, it might not even be 100,000. It might be maybe 20,000. And their lowest flow, it can even be negative. So each and every one of us, we have a different profile. For some people, the ceiling is as big as 10 million. For some, it's 100 million. YNI is 10,000, NI is 20,000. But the principle and what happens is similar for each and every one of us. If the bank account is approaching this ceiling, we tend to become excited and we become careless in how we handle our finances. So this is common for everyone. Now, when we become careless, we start doing dumb and stupid things, which lead us to lose that amount of money that we had. And we lose it until it starts approaching our floor. When it starts approaching our floor, then we become miserable, and then we start implementing things that eventually lead us into saving more money. So if, let's say, you were excited, you start eating out, magagula pizza, magagula KFC, umembo banga haya magali moto, every single day, but just because you're making more money and it is approaching your ceiling, you get excited, you start hiring magali moto, or hiring cars. Distance you normally you'd go over bus, you think you would Ebola taxi. So those decisions will make you lose that amount of money that you had, and eventually you become broke. So as the money in your bank account is approaching the floor, you wake up and then you realize that no, so you start doing things that will lead you into saving more and conserving more money. So this might be saving, it can be saving, it can be living a modest lifestyle. Pantayo mona excited, una samuga kwanu, unagamba ukala kwaweka 47, kunyamba adweka na mioa. But then when you're becoming broke, You go back to your parents' house, you start, using public transport, you stop hiring Zintu, you stop eating out and all these things. Now, when you're making those decisions, now your financial status, imamba kuzitolera, until it reaches a certain place, a certain level, the equilibrium, pakati. When it reaches this equilibrium, most of us are happy because that is where our bank account usually is. So we're happy, we're fine. But the moment it gets out of this zone, we get too excited and then we become miserable when we lose that money. So it's important that you recognize this happens to everyone. It doesn't depend on your income. Whether kaya ulipi bank account umeweza Airtel Money, kwa Airtel Money kwako you're going to realize kuti palifika ina yake yoti ikafika you become careless, and then palifika ina yake yoti ikafika umazitolera. Now there's not much that we can do about this ceiling. We are not supposed to limit our ceiling, but the goal is that we must always uphold my standards. So we must always be principled and we must always uphold this floor. If we feel like we are broke, 25,000 kwacha, it's very important kunena kuti every time we should uplift that standard. So if 5,000 kwacha in our bank account makes us feel broke, the goal should be it shouldn't be 5,000, is it 10,000? And then from 10,000, 10,000, we should work hard enough to the point where this standard, it should go up. Because this ceiling always moves and this standard always moves. So when you're aware of this, it helps you to avoid making these poor decisions, this excitement. It will help you prevent this unnecessary excitement. It will help you preserve the little money that you have and the little cash that you have. If you're not aware of this, then yeah, you will lose a lot of money. Moving on, these are just basic rules of money, finances. If you've read basic financial books, whether Rich Man of Babylon, Kaya Psychology of Money, Kaya Jani, you see that they talk about the very same thing. You need to spend less. You need to spend less. This is a principle. You spend less than whatever it is that you earn. The reason why I'm talking about these rules is because matters of risking your money. So if you're failing to control the money that you're earning, if you're undisciplined in how you manage your money, you'll not even reach that point of risking that money in trading or investing. You'll not even have enough money to risk or enough money to trade because you are undisciplined. So this is very important first, because this is how you're going to gain your capital. If you ignore this, then you will not have any capital. So you just be one of those people who complain that I don't have any money to invest. I don't have any money to start business, or I don't have any money, to trade with. So number one, spend less than what you earn. Whether you're earning 20,000 a month, you're earning 100,000, 10 million a month, make sure that you're spending less. If you find yourself that you're spending more for whatever reason, find out what that reason is. Whether you're living in an expensive house, or whether you're driving an expensive car that uses mafuta mbili and all those things, and make sure that you're spending less. Another thing that is very important is that you need to pay yourself. So this is important. You also see how important it is, because if you are not paying yourself, you can lose everything investing. You can lose yourself just investing, risking money, and not celebrating. So you need to pay yourself. So whether you're doing any sort of business, that business has to pay you in one way or the other. If it is not paying you, then it's going to be hard. Now, paying yourself first has to be a certain percentage. So a good example, when you're trading and you've made, let's say, a profit of, let us just say 100 US dollars, out of this figure, you can set a percentage that you will always pay yourself, let's say 10%. So that 10% goes to your pocket, no matter what. So whether you make 100 US dollars, the 10% will be 10 USD. That money, you take it and you go eat it. If you're doing a business, you've made more sales, you've made profits, a certain percentage should be your salary, because that is the thing that is going to sustain you. It will give you the motivation to actually see that the thing that you're spending energy on is paying you, and there's future in that. This is good as opposed to just being that sort of person who's constantly investing, constantly growth and drama, constantly because you can do that and you can end up losing everything and you have nothing at all. All right, so pay yourself first. The other thing is saving. Now, there's no secret around this. You have to save. If possible, automate my savings. Now, I've said that Standard Bank allows automatic savings. If you go to Standard Bank internet channel, the internet platform, you can set with the from your main account to say a pure savings account, and then from that savings account you can plan and you can set with every first of every month is it to such figure from your main account to this savings account, and Standard Bank does that. I'm not sure about all the other banks. Now, this is important because over time, these savings, they accumulate. And this is the only way that you're going to earn capital, because there is no other way. This is the first step of getting the capital that you have to invest or to trade with. And finally, force your savings up. So if you're someone who saves, let's say 10% every month, you have to be the sort of person who's always pushing this figure upwards. So if you're saving 10% every month, after, let's say, a certain period, you change, put it from 10% maybe to 10.5%. And then after a certain period to 11%, and then at 12%. And then over time, you're going to realize that the money that you're making, if you make, let's say, 100,000 every month, and if initially you're saving 10%, which is 10,000 every month, and you'd feel like 10,000 is a lot. Over time, when you're pushing up these savings, you realize now you can live under 90,000. And then you realize that you can live under 80,000 and you'll not die, you'll survive. And you can live even under 70,000. It's very possible. The only issue in Mangukhala, we have standards that we are trying to uphold. This thing that I was explaining, we're trying to uphold a certain standard, we are trying to experience something that we haven't reached the level for us to experience. So it can be that you're living in a neighborhood, you're in a neighborhood menu, or you're trying to rent magari moto, rent magari moto. So when you implement all these things in a space of a couple of months, or maybe up to a year, you're going to have substantial capital, with which from that capital, you can now start looking at ways of investing or trading that particular capital. All right, so this is just a general question to say, Uli, when you look at yourself, how much money can you make? When you look at your life, you look at yourself, your job, and whatnot. How much money can you make as an individual, you yourself? Now you can make calculations. You can say, Uli, when are you employed by the government, and maybe they pay you 200,000. Yeah, 200,000 or maybe 300,000 every month. If you want to know how much money you can make, of course, the obvious thing is imagine the best scenario. Let's make it sweet. Imagine the best case scenario that you have had the best paying position in your in your profession. So let's say you're not an intern. You have a high paying job. You are a manager, or let's assume you're a director. So you're a director of something in the government. So let's say I don't even know how much directors make, but let's say you're making 1.8 million every month as a director in your field. You've spent so many years, you've spent so much money upgrading, getting degrees, getting my masters, getting my PhDs to be getting this money. And maybe a few allowance, yeah, 100 liters and some allowances. So you need to know how much money can you make. Now, this is the best case scenario. You have looked at your job, you've looked at the best position you can ever get with your qualifications. You found that it's 1.8 million. If you multiply that by, let's say, 12, it's about 20 million, 21 million. And then you multiply that, let's say, over 20 years that you'll be working in your life. You see, would maybe the most amount of money that you can ever make is around 320 million. So this is the amount of money that you will ever make in your lifetime in your current job, all things being constant and all things being in a position where you're getting the best benefit that you ever gain. So this is capped. There's no way of going beyond this. You can work from 12 hours a day to 24 hours a day. You still get paid the same salary by the end of the month. So for 132 million as best case scenario. Worst case scenario, I'm gonna say promote, you're still struggling, you get in a scholarship, it takes time, you fail exams, maybe ikakwera salary mwine kufigura, let's say 1 million. So you find that this figure is even less, it's even much, much less. And then you look at the cost of living and all sorts of things. You find by the end of your life, maybe the most amount of money that you can ever make, see, was $500 million. It's not going beyond $500 million. Now, if the most amount of money that you're making all your life, see, you figure $500 million. When you look around, zintungati nyumba, kukula nyumba, town, nyumba ya bwino, you find that the prices are crazy. It's already eating a big chunk of your life's work. Mina manyumba ina ma 100 million, the ones which are not as good. Ina ma 200 million, 300, depending on the area, location, But then you see that it doesn't look good. You have to work a lot. You have to give a lot of hours just to make that money. And even that money might not give you enough of what you want. So that is the traditional thing. That's the traditional thing. You look at what you're doing, the best case scenario, the best job, the best salary, you multiply it over 20 years, 30 years, you get with the figure. You're not going to get beyond that. So this is the traditional way, as I said. When you have a job, you're working for the Malay government. The government is your employer. This is how I think of it. Simply, I think of our service divided into three things. As a person, I mean, there is the technical work that I do if I'm employed by the Malay government. So there's the technical work that I'm doing as a service to the government. This thing takes, I would say, maybe 8 years for me to get qualified in this technical work, because it takes about 8 years to primary school, 4 years to secondary school, till about 12, and then maybe 4 years university, which is around 16, and maybe 1 year internship. We're already looking at 17 years. 1 year looking for jobs, yeah. So it's around 18 years just to get this technical experience so that you can do something with your hands. Omano, as an individual, apart from the technical work, you also have this administrative side. This is the administrative part of you. Administration basically is just about how you handle yourself, how you manage yourself. So as an individual, you do things like, so like for example, myself, I'm in the health profession. So in the health profession, CPDs, continuous professional development, yeah. Continuous professional development, kuli my short courses, kuli zintungati, self-management, work ethic, all these things. So that is my administrative part of me. That is how I manage myself. If I'm not managing myself properly, even if I have good technical expertise, I will fall behind. For you to kuzibwera new knowledge, kuzibwera new techniques, new research, and I'll not be updated. So this administrative part of me is helping me improve my technical work as an individual. And then there's the marketing aspect of myself. Now, for most of us who are employed, let's say by the government, we only market ourselves maybe once or twice in a year. And for most people, they use my CV. So that is the only way that a lot of people are marketing themselves, CVs. The smart guys or the smart people, they're using things like maybe social media and basically networking and all sorts of things, putting themselves out there. But the point of this slide is that you understand there are three components of your life. The things that you do with your hands, the technical expertise, which takes a lot of time for you to master. The administrative part of yourself, which is all about managing and improving your technical work. And then there's the marketing side of you, which helps you get my jobs, basically. It helps you get jobs, it helps you get scholarships and whatnot. So if you, in this slide, I've divided someone who has a job and then someone who has a business. Later on now, you understand the point that I'm trying to make. You see that if you are someone who's employed, a government employee, you have advantages. You have an income that is stable, predictable. So you're making money every month. Every month, ndramekulowa. Mwezi ukatha ndramekulowa. You don't really have a lot of risk because your income is predictable. You don't have the pressure of anything, especially that you're chilled. You don't worry much. You have clearly defined roles and expectations. So when you're getting the job, this is what you're doing. You know exactly what you're doing that particular day. If something is beyond your scope of practice, you just hand it over to someone else. And then you have less decision fatigue. So these are just the advantages of working as an employee. They are good. They are very good. It will make your life easy. Things are guaranteed. And it makes the thing that I talked about saving easier. Because if your income is predictable, then you can plan. You can plan easily to say, in 3 months, I will have made such amount of money. I would have saved such amount of money. So things become very predictable and easy. However, some of the disadvantages, they are the ones in red. The biggest one is that your potential is capped. You have a limit to how much money you can make. When I talked about how much money you can make and we did the calculations, the figure that comes up, you cannot go beyond it. The only way to go beyond it is, I don't know, maybe you're working overtime. You just have limited hours in a day, so you cannot go beyond 24 hours. So no matter how hard you work, no matter how skilled you are, your potential will always be capped. That's the income ceiling. And then the second point is that you have a single client. So when I said you have a technical work, you have a technical skill. It has taken you 18 years or 17 years. Komano, that skill is going to be focused on only one client. and this client is your employer. So when you go to your workplace, let's say anakulemba ntchito ngati secretary, you're doing secretary things, whatever they do. That is your only client. The moment you try to find another client, you usually struggle and you have issues with your employer because they will not want you to spend time cooking and children. Also, there are some small things, issue like time. You can have a job that can take, let's say, 30 minutes. In 30 minutes, wavanga ntchito ya tsiku limenelo wamaliza. But because you are this, you cannot leave. You're not going to be able to leave at halfway. You have to wait until the end of the day. That is the other problem. So the client that has employed you, the client that is getting your services, is forcing you to show up at a specific time. He's forcing you to leave at a very specific time. Even if you've done the job perfectly, by the end of the month, you're not going to get double. Even if you put triple the effort, mwezi ukamata, you will not get triple the reward. So those are some of the problems of this. And then there's also the thing here, geographic dependency. So if you're stationed at, let's say, Nkula, you're stationed in Nkula Falls, it means you and your family will have to be in Nkula. You're not going to be in Lilongwe, you're not being Blantyre, you have to be in Nkula Falls. If you're stationed in Usalima, that is where you're stationed. That's where your family will be. That is a disadvantage of this. And also, I've talked about the dependence on one client. Now, it seems like a nice thing when you have a good paying job, temati job security. We talk about job security. But to me, it just sounds interesting to say, we believe in this security, but you just have one client. If this client collapses for whatever reason, you're dead. If it's a company and that company becomes bankrupt, you're dead. If it's the government and the government has no funding, it means good salary and it means that your family you live on pain. So these are just some struggles of an employee, but I'm not downplaying the importance of it. There are very clear advantages here. It can make your life very predictable. It can make you easily plan for the future. Now, aside from that, you see, I've switched up the chart. There is a lot of emphasis in technical work the moment you get a job. There's a lot of emphasis here, and most of us, we spend our life doing this. So if I was trained as if the training that I did, I just spent the rest of my life doing that particular thing. But for most people, administration, they don't even do it that well. Most people don't even work on improving themselves. They don't even do professional development. And worse, the thing that suffers the most is marketing for most people. Their CV is just there, but gather dust. And I've seen people that have been employed for over, let's say, 15 years. They have had a job for 15 years. But you look at their CV, in those 15 years, there's nothing that has been gained, nothing new. No new experience, no new skill, nothing, just vibes and technical work. So to me, that is dangerous and that is problematic. Aside from these things, and she was as an employee, there is now this. And in this day and age, this thing has been glamorized. Kwambiri makes it also dangerous because this has its issues. But the advantages, the easy ones, you see that the income potential is unlimited. So you know that if you have a customer, if you have one customer today, it means good you make. So let's say I'm a freezer 10 kwacha. If you have one customer, you're making 10 kwacha that particular day. If you just do a lot of marketing and you get 100 customers, the only is 100 times 10. So you're making 1,000. If you find a way of mass producing that freezes, and you're making 10,000 per table and you're managing to sell it all to 1,000 people, you see what the income potential is unlimited. It all just depends on how much, it depends on your number of customers. Yeah, it really just depends on number of customers. That's it. That is the only thing. And then you have clients, the client thing. Now, when you're working for someone, I said, Woody, the person you're working for is your client. Surely, well, you are your own business. You are managing yourself. So your client is the one. I mean, what's a contract? Yeah, shit. I mean, you cannot change. But if you're a business owner, you can have multiple contracts at the same time. So if you're someone who is a skilled driver, but you do maybe part time or maybe you do freelancing, you can drive multiple people at a time. If you're a graphic designer, instead of working for NBC, you can have your own thing and you have multiple people at the same time. You can have multiple projects. And the other advantage at time, unless your time is limited, I mean, your time is determined. Even you have to wait. Or if you have time, and you were told me to do something in 2 weeks, in 1 day, you can deliver the thing and you're done. You can spend the rest of the remaining days, enjoying life. Theoretically, yes. So the other thing is leverage. If you are an employee working in Pinawage, you want to, let's say you want to do something that will make you money. They want you to show up. You cannot just tell someone else who has similar skills and expertise. You cannot just easily do that. I know that it happens. It can be done in government. Yes, Zmatega. But in other places like NGOs, companies, you cannot do that. I'm aware now. But when you're a business or when you're handling yourself as a company, you see, if you need to do something else, you can find someone else to do the thing for you. So that is the leverage. So if I sell kaya nkhuku, kaya nimagulisa mbuzi, wina akafuna mbuzi, komeneo ndarova, sindufuna ndikapange deliver mbuzi. I can tell someone else who has the same product that Hogawanga deliver, and they'll make money off of that. And maybe I can get a commission too. That is a good advantage. And then there is also this Zama taxes. Disadvantages, these ones. Your income is uncertain. You have no idea when you make money. You don't know whether this week you'll make money or not. You don't know whether next week IMRI has a show, things like that. And also you're taking in a lot of risk because things are unknown. Decision pressure, cash flow stress, and delayed gratification. So you see, whatever, there's a lot of emphasis on marketing. And I would also say administration, because you don't really have to know how to do this. You can find people who do this when you have a business. You can find people who do this. Komano, you need to know, you need to find clients, and then you also have to manage these people. So that is the leverage, and that is an advantage. So business owners, they create systems that produce value. So they are creating a system that produces an outcome. They are not creating systems. They are the ones directly creating the value. So the one directly creating the value, yes, the thing is still valuable. Komano, it's at the expense of their life in one way or another. They're creating value, Komano, by creating a system. So they are leveraging off of these people to create an outcome. Both of these, they have the advantages and disadvantages. And now when we talk of trading, it is different. It is not this. That's what I can say. First of all, the income is not predictable. The risk is definitely huge. There is no clarity. There's no defined role. There's no clear expectation. Anything can happen. There's a lot of decision making. Omano, you have the benefits, angajawa, where your income potential is unlimited. You can trade multiple things at a time. You have leverage, which I'll talk about later on. And also you have this thing, my tax break. But you still inherit the disadvantages of business, whereby your income is uncertain. Sizimadziwika whether your trade will make money. Ngaravanga invest for stock market. Sizimadziwika where FDH will be in a couple of months. No one really knows. You have a lot of decision pressure initially, and you have a lot of stress with cash flow. And you also have to have delayed gratification. Sure, you're not going to make money, definitely. So I would say the investing thing and trading thing, it fits sort of, yes, it carries my risk under that business. And it is a good thing if you handle it as a business, because you also experience the advantages. All right, so far, by anything that might need clarification on what I've discussed, this an opinion or something a bit different, you can type my chat box, or you can just raise a hand and move up full set. You can unmute yourself and ask. Any question? Then I should take it quickly. So far, things are clear. All right, so going back to the same question, I asked, how much money can you make? And we did all that. Now, how much money can you make from trading or investing? Again, by the end of the day, it just goes to, it falls to these two things: your skill set, and your financial muscle. But those are the only two things that matter. So normally when you Google forex traders, investors, you see a lot of guys like these, fancy houses, fancy cars, chanchani, yeah, komano. For most of these guys, it's also a business for them, because that is how they make money, by flashing this so that they can get people to buy whatever it is they're selling. But anyway, two things: skill and your financial muscle. If you are skilled in whatever it is that you're doing, yeah, you're a skilled trader, you're a skilled investor, and you have followed my principles, saving, you're able to be disciplined in how you spend, you have financial muscle. So if you have these two things, you make a lot of money. It's just as simple as that. If you are skilled but you don't have financial muscle, then all you have to do is read about how to make money. So financial discipline, one; getting a job, that is also a good thing. Starting a business or whatever can help with financial muscle. If you are not skilled, you don't have this, but you have financial muscle, what will happen is you're going to lose money, because you need to know what you're doing. In every industry, you need to know what you're doing. So without the skill, but you have money, you will lose that money. So a typical example is that right now we have my scammers, Ambili. They'll say that you invest in them and then they'll give you money after such a period of time. They might say they are traders, they might say they are crypto investors. They have different ways. But then because you are not skilled or because you're ignorant, but you have money, you take your money and you give your money to those people. That money is going to go. You lose it. Either they'll scam you or they'll find an explanation. AI, MRA has done this. AI, we have to pay taxes, and then they'll disappear because you're not skilled enough to identify a scam. If you don't have a skill and you don't have financial muscle, there's nothing that is going to happen. You just be broke. So the point that I'm trying to make, you need this. You need skill. You need skill. To gain any skill, you need to learn. So you need to learn. There's no going around it. But technical work, you spent 18 years, 17 years at least. If you're a medical person, probably 19, maybe even 20 years. If you're a lawyer, maybe even 20 years. You spent all that time to learn a specific thing. There's no way you can hope to learn how to make money in 6 months. It's going to take time, like a year maybe, if you're lucky. So you need to learn a skill, give it enough time, maybe a year. When you are skilled, when you have learned the thing, and then you are also diligent in how you're doing your savings, by the end of the day, there's no doubt you're going to make money. So to gain skills, obviously we have free content that is online. You can find it on YouTube, you can find it on Telegram groups, Instagram, and other different places. Personally, we have over 1,000 books. There's a Telegram channel that I created, I think last year or something like that. And there are a lot of things that are put there, a lot of books, a lot of links. There are also lots of free YouTube videos that talk about investing. They'll talk about trading. They'll talk about saving. They'll talk about businesses and whatnot, free. But free things will also have their own disadvantages. So there is that. And then you can also pay someone to teach you. So you pay someone who you admire or who you want to become. Okay, you don't just pay random people. You need to study the person that you're trying to pay. Study them well, study what they teach, study how they talk, what they do. And if that is something that you want for yourself, then you follow that particular person. They might teach you for free. They might charge you something. It doesn't matter. But the advantage is you have a very well-structured thing. As I've said, there are many teachers out there. Some who, even in Malawi, I'll give an example. If we are stock market, right now we have a lot of people that are selling mentorships. Ena kuphunzitsa ulere, ena kuchaja, ena nalemba mabuku, they'll make you buy. The point is there's a lot of content, free and paid. Again, we also have a structured course with content as far back as 2024. So if you want that, you can pay for it. If you want to follow whoever it is on the internet, as long as you know that whatever they are doing is legit and it's not a scam, then it's good to go for it. Again, as I've said, skill takes time. So you have to give it enough time. You will not learn anything in less than, I don't want to give a period, but I would say 6 months. You need to be in a thing for more than 6 months, at least for your brain to be well molded in that particular skill. Financial muscle, we've talked about bootstrapping. So this is where you're saving money consistently for trading or investing. So you're saving to do that. In the trading space, we also have these companies that are called prop firms. So these ones, they invest in profitable traders or investors who are willing, who show that they have skill. So it is the fastest way to scale up. There are a lot of these companies, to be honest. Some are basic scams. I will not lie. Some of them are scams. Some of them are legit. So you showcase your skill, they give you money. And most of this money is usually above 10,000 USD most of the time. And all you need is this, all you need is skill. And then you have private investors. So these are people that if you are really good, you have evidence of your skill. These are people that can be your family members, they can be your friends. They are people who have money and you convince them to give you their money so that you trade for them or you invest for them and you make money and then you share by the end of the day. So I should say that these programs, most of them, um, they they give you this deal. Whatever money that you make, they mostly take 20% of that money as theirs, and then you usually get 80%. So if let's say you have a $10,000 account, you invest or you trade with it, and let's say you make 5%, which is like $500. So you get 20, I mean, you get 80% of $500, which is $400. So your take home is about $400. And then right now, $400, if you withdraw that, it's going to be somewhere around 1.5 million. Now, making 5% can be done maybe in a week or in a month, depending on how you're doing it. So it's a very good way to scale up. A lot of people, they worry about this. A lot of people worry about money. A lot of people. It's not just in investing and trading, even in business. A lot of people, they'll tell you that capital is a problem. They don't have capital, they don't have mpamba, alibe, choyambira, akaodera chani chinthu. But they are not even practicing this. They are not even saving consistently. They are not looking for funders. There are a lot of funders out there. They are not applying for grants. They are not, it just tells you that most people are not serious. So get the skill. If you're trading, you're investing, you're doing business, be skilled at it, have good skill, and eventually this tends to follow. All right, so that is on the basic on psychology of money and whatnot. The next thing that I wanted to talk about has to do with the difference between trading and investing, as well as my asset classes. So very important, you need to know what it is that you're trading. So asset, I'm sure most of us here, we have heard what an asset is. We know what an asset is. This is something that gives, okay, you can define it as something that gives you a return. Yeah, something that gives you a return. It's usually used as the opposite of a liability. So most of us, we know it's something that is valuable, something that is a valuable thing. So there are different classes of such things. So if you're someone who is a business person, you sell, you buy and sell, let's just say. You can consider yourself as someone who's doing products. So you're basically buying and selling. So you can be doing that with crops, let's say soya, maize, and whatnot. Buying and selling, what you're doing, you're trading. But what you're trading crops, which are commodities. So yeah, that's your product. And then there are some people, they manufacture goods and they manufacture goods. So mina amapanga cooking oil, kaya amapanga soap, kaya chan. And then there are other people that make physical items, which they sell and then they make money. So apart from products, you have services which are produced. So these are things that you're doing for other people. You have like health service provision, construction, consulting. You have my bank company in town. They are providing us a service. They're not really giving us anything. They're just keeping our money got in my bank. they'll tell us kunena kuti you there's this option, you invest with us using interest yakuti komano they are providing us the service, and then we need my benefits. And there are a lot of companies in Malawi which are in the business of services. A lot of companies which are producing products and selling. Now, my asset classes that I'll talk about are these ones. So whereby I'll talk about stocks. So this is you owning a business or owning a piece of a business. So that is called a stock. So if I own a business that manufactures Colgate, I have 100%, let's say I have 100% shares of that business. It means I have all the stock of that business. So I'm a business owner. But the business itself is an asset to me because the business is making me money. You have commodities, nagamba zama crops, so those are commodities. Soya, chimanga, punga, you have gold, you have oil, you have silver, and so many different things. You have currencies and fixed income. So I'll talk about these things. I will not talk about these. This is how we normally do businesses in Malawi. So this is the purpose of this presentation. All right, so asset classes. As I've said, an asset is something that what's a return by the end of the day. We have different classes or different groups of this thing. Ndagambagalizama stocks, where you're owning a piece of a company, or you might own the whole company, or you can own a certain piece, whether it is a piece of FTH, a piece of National Bank, Icon Properties Limited, whatever it is. So the issue yama stock ndionena kuti my company, when a company is starting out, you have one person who has the vision or the dream. And that one person spends all his savings, life savings, he'll start a company, register the company, and then after registering, doing all the compliances and the legal requirements, takes another loan, hires my employees. That person doing all that work, that person who's carrying all that stress is the business owner. That person owns probably maybe 100% of all the stock in that company. It means you're selling in business in minimum. That is a very stressful way of doing it, but some people do it. It's a very stressful way. Some people, they find a co-founder and then they'll split. So they'll say 50-50. Another one will contribute 50% of the things needed. Another one 50% of the things needed. Another one maybe might be like a manager, CEO type. Another one maybe might be into marketing or the technical aspect of the business. By the end of the day, you have someone who owns 50% of the stock and 50% of the stock. But then, because these companies, if you just stop there, those companies might never grow big enough. I don't know who, but people or whoever it was, they came up with an idea of creating an exchange or a place whereby that particular company can be it can be given out to the public, but even the public can own a certain percentage of that particular company, which is what's called an IPO. So basically a company moving from a private state to a public state. Everyone can have part of that particular company. But for everyone to have part of that particular company, they have to contribute a certain percentage of the stock of that company. So if the company inating 100 million for that company to be set up, they can divide that and they'll create my shares to say, well, if you want to own 1% of this company, you need to pay this amount of money. So people buy those shares. So when you're buying the share, you're giving the company money, and that company will use that money to even grow further. So it is a way of expanding small companies. So we have exchanges, we have structures which facilitate that kind of thing. And these are called my stock exchanges. So stock exchanges, they will help my companies to become public, and they will help the public to have access to my shares, my companies. There are a lot of stock exchanges out there. In Malawi, obviously, there's the Malawi Stock Exchange, MSC. It has its own pitfalls. It's still ancient. There are a lot of things that are still manual, a lot of things that are still old, ancient. Komano, it's just how it is. Komano, there are other stock exchanges which are better. Johannesburg Stock Exchange in South Africa. We have a New York Stock Exchange in US. London Stock Exchange in London, Britain. So stock exchange, I'm doing when you regulate how the public can have access to my shares. So if you wanted to buy my shares, I'm a company is what I London, then you have to go through the London Stock Exchange. The Malawi Stock Exchange will not give you that ability. We'll talk about how to do that. So go. If you want to buy my companies, got Apple, what else? Facebook, Nvidia, then you have to go through the New York Stock Exchange in America, US. You cannot buy them through Malawi Stock Exchange or through the Johannesburg Stock Exchange. Trust was Basel. They are not regulated there. So that is if it is in stock. We have fixed income things. So these are things that will give you a guaranteed income. They'll say, well, after this specific period, you get this percentage as your income. The commonest ones, my government bonds. So you normally take your money and you loan it out like to the government. So they'll give you an agreement to say that you're giving us this amount of money. We will be giving you back this percentage over this period. And then by the end of this period, is with the interest, of course. So that is fixed income. It's guaranteed, it's stable, straightforward, no drama. You have my commodities, we know these things. We have my indices. So indices, these are, I would say, what these are. These are like performance indicators. So they are like indicators, or they are tied to my stocks. So these ones, they are tied to this. So I'll give an example. The commonest indices that maybe you might know S&P 500. So S&P 500 is basically a thing whereby they look at my stock of 500 companies in US. I'm a parties of the performance. I don't know how they do it, but just look at all the 500 companies, mix up all their performances, and get one general outlook, one general view. So if the S&P 500 is going up, it means that some 500 companies in America are doing well. If the S&P 500 is going down, it means that some 500 companies in US are doing terribly. So indices, I like trading them because it's it's an easy way of diversifying your risk. If you are in Malawi, they'll tell you that if you're investing at the stock market, they'll tell you that you need to invest in different stocks. Basically, what they're trying to do is they're trying to diversify. But if we just had an index that is categorizing all the banking stocks into one, I don't know if it's there or not because I haven't really spent time to find out. If you had one thing that is looking at all the stocks of banking sector, that's one indicator or one performance value. That would be an index. So indices are good, they are cool, I like them. You have S&P 500, US 30, we have NASDAQ 100. All these are American based. In UK, we have UK 100. So they look at 100 companies in the UK, their performance, and then they graph. I mean, they give us that performance as a combination. In Japan, you have Japan something something. I've forgotten. So indices, I like them. They are good. And then we have derivatives. I've never really tried to find out what options are. I've been too lazy to do it. Komano, there's a thing that's called options out there. I don't think it's a good, I don't even bother with these things. There are also futures. So futures are also based on something. I think they're based on indices. And okay, they might be based on a couple of things. Futures might be based on commodities, they can be based on currencies, they can be based on stocks. So these ones, they're a bit tricky to explain, but they are based on something else. So they give you a performance of something. So people can trade them too. These ones are highly, highly regulated. It's very difficult to trade futures in Malawi. I've tried, it's hard because of regulations. You need to be in a country that is recognized, visible, where your passport will not be denied and all that. The other thing is currencies. So this is what people normally call Forex, which I think is wrong because Forex means foreign exchange and all these can be foreign exchange. All these are foreign exchange. Commando currencies. So this is basically you're looking at currencies of one particular country and you're comparing it to another country. So you can look at Malawi currency and then you can compare it with the with what's this, with the rand, with the South African rand. ZAR. So people trade these things. They look at the Malawian currency and say, well, this currency is going down. So because it's going down, I should be buying the ZAR. So whatever that is the trading that we're talking about. So you buy this ZAR, I mean the South African rand, and then you come back to Malawi, you sell it, so you make a profit because the Malawi kwacha would have dropped. Yeah, and then you also have cryptocurrencies, which are technically currencies, but these are more tricky. They are more tricky, and yeah, I'll not go too much into this, but they're also currencies. They were created to be like another decentralized way of exchanging goods and services, which is not controlled by my government. So it's a bit, it is something that has been hard to implement. Commando, it is a good thing. It is a good method of exchange because you don't really get a lot of regulation around it. All right, that's far. Any question, comment? Because now I wanted to start going one bit into the actual trading stuff. All right, just a minute. I'm trying to share TradingView. So for those who managed to install, to download and install TradingView, I said that you should install it. Mm. Oh, okay. Great. Someone just commented some options, so you can check in the messages at my treasury bills, fixed deposits, commercial papers. All right. So TradingView is it's just a platform which I use to analyze my markets. So if you open tradingview.com, this is what you see. Seems like it's overwhelming at first, but no, it's very simple. If you have created an account, it might look something like this. If you haven't created an account, I'm not sure how it looks, but it should be similar to this. Now you see that it gives out a market summary of major indices. You have them right here. And I'll not really go through a lot of these things, just go straight to the point. So if you want to analyze markets, different markets, as I've said, there are different asset classes. TradingView will give you access to most of these things easily. So if we go by markets, and then you can choose, you have different countries. You can choose US, Canada, UK. It'll give you my markets in those specific countries. You can even go and look at my news, different news. So you can have an overview of news announcements that have to do with the markets. You can look at economic stuff and a lot of crazy things. But what I want to do, I want to look at the market. I just want to look at the chart. So I'll just go by. Right, so you see we have assets, we have indices, we have stocks, we have cryptocurrencies, we have futures, we have forex, government bonds, corporate bonds, but I'll go to indices. So indices, and I just go to the S&P 500. Okay, so you get something like this, gives you the S&P 500 index, an overview chart of the S&P 500. So this is how it has been moving, I think since 24 April. But I want to see the overview, the whole chart. Of course, you have news, you have different things here. So you click the full chart, then you need to open the full chart. So normally when I'm trading or investing or doing anything, this is what I'm looking at. So TradingView analysis. When you open the full chart, you have different things. For any kind of trading or investment activity that you're trying to do, important thing, Kwambiri, you need to know what asset class you're looking at. One, you need to know what particular symbol or instrument you're trading. So the symbol can be you can think of it like the actual thing that you're trading. So this is an index. The S&P is the symbol or the instrument. So the S&P is the instrument that I'm trying to trade. And then the issue of time. Up here, I don't know how it looks when you open an account for the first time. Omano, you have different time frames. So you can look at data, how it looks every minute, and the data that you're looking at is price. You can look at data, how it's looking over 1 year, over a day, over weeks. Omano, I'll not go too much into that. So TradingView, on the left side, normally you have your tools that you use to analyze. Different tools on the left side. On the right side, you have a graph. So this is price right here. So right now, if I zoom in and I look at where this bar is, on the right side, the price is at 7,164 US dollars. So it means right now, the S&P 500 is at this price. To buy one unit, one contract, it's at 71664 US dollars, which is crazy expensive for a Malawian. But that's how it is. If I look at the bottom, you have time. So clicking at the bottom, you move time. So you can look at the price depending on how far back you want to see. So whether from the 8th of April to now. So I'll just do this. So Pansipa from the 8th of April, just looking at this, it looks like By 8th of April, the price was 6,751. Right now, the price is at 7,158. It means that if you're someone who wanted to invest in this particular thing, and you somehow were able to guess that the S&P 500 is going up for whatever reason, you would have bought at that particular point, and then you would have sold at this particular point, and you would have made money. The money being the difference between where price is now and where you bought that particular price. So that is the money that you would make. Anyway, apart from that, on the right side, you have your menu where you look at my different symbols. I've talked about symbols. If you have indices, you can look at the S&P 500 or other indices. If you click on the plus sign, then you have a lot of access to all the indices. So you have all, you see everything here. You can look at stocks, you can look at futures, you can look at Forex, you can look at indices. Trading view even goes as far as showing you the corruption levels, imports and exports. You have options here. So normally you click on whatever it is that you want to watch. So S&P 500, US 100, and let's say US 30. When you drop here, then I won't go much into this. Or manual is something that you can just watch my YouTube videos. All right, so I just showed you trading view, Majambo Jango. Moving on, participants of financial markets. Now, the participants that are trading these things, normally you have my bank, which are participating. You have my hedge funds. So banks are making money trading. Hedge funds, they're just trying to preserve the money that they have, or maybe they're trying to make money. And financial institutions, and so many other different people that we don't really know. All right, so it's important to all right, as I said, in order to make money on the financial markets, basically what you're doing, you're just trying to buy something when it is cheap so that you sell it when it is expensive. That is the basic thing, regardless of whatever it is that you're trading, whether you're doing maize, you're doing oil, or whether you're trading an index, you're trading a currency, a cryptocurrency. You just want to buy it when it's low and you want to sell it when it is expensive. Or you want to sell it when it is expensive so that you can buy it back when it is cheap. That is the only way that you're going to make money. You don't buy something that has already become expensive. That is how people lose money. Example, you don't buy a stock just because it has now become popular and it's trending, because chances are that is that's the worst possible time to be buying a stock. The people that buy the best priced stock, they are doing that when the hype is down, when people are panicking that stock prices are going down, or when prices are going down, people are panicking. That is the best time to be buying. But the only problem with these markets is that the concept of something that is cheap or something that is expensive, it's sort of abstract. This is so abstract. We don't really know what a cheap thing is. We don't really know how cheap a thing can get. We don't really know how expensive a thing can get. So if you're looking at the price of, let's say, a currency or a cryptocurrency, you're looking at the price of Bitcoin. Bitcoin can be going up in price. And you might think that, hey, Bitcoin is so expensive now, it's too late for me to buy. Okay, but it might continue going up and up and up and up and up. You don't know when it is going to stop. The same thing when, I shouldn't say that you don't know, but it's it's not straightforward for you to know how far it's going to go. It's the same thing when something is crashing. You don't really know how far this crash is going to go. You can only anticipate or maybe speculate. That is why all sort of trading, all sort of investing, it's all speculation. A good example is the maize. People who had maize last year, traders who bought maize last year got 40,000 from farmers, expecting to sell at 100,000 by the end of the last year. They did not, they speculated that by the end of the year, the price would be at 100,000, 90,000, 80. Komano, the crazy thing happened, price dropped because of other factors. So we don't really know what is cheap or what is expensive. The only thing that we can do is to have a framework on what defines our decision making. So we can have a framework that tells us that at this, when this happens, or at such a point, then something is cheap. Basi. The framework that will tell us that. But even that framework will be wrong at some point. You should have a framework that will tell you that this particular thing is expensive. Don't buy it now. Wait for it to fall in price. So those frameworks, those are the things that you learn from people who are already doing the thing. But otherwise, if you just look at it, you can look at a stock, FDH, you see that it's just going up. You buy, and all of a sudden now it's crashing. And you think it's crashing because you bought it. It's because you have no framework telling you what is expensive and what is cheap. You have no framework that is telling you on how to anticipate price movements. So these frameworks, those are the things that you pay for when you're learning. When you find someone to teach you, you spend hours on YouTube, you're just trying to find a framework to tell you how to identify cheap, how to identify expensive, how to identify when to buy and when to sell. That is it. So, trading and investing. I'll just try to differentiate them in a simple manner. Basically, a trader is geared towards short-term profits. That's it. So this one is more like a short-term guy. This one is more like a long-term vision, sort of. That's the only difference I can give. These ones, they tend to buy something. So if they anticipate something to increase in value, they'll buy it quickly, they'll sell it. So they're in and out. Normally, this can take a matter of minutes. So it can be minutes or maybe days or maybe just weeks, just a few weeks. That's it. So those are traders. But these guys, investors, they tend to look at years. So these ones are looking at years for them to make money. So they're looking at the long-term vision. A trader is looking at charts. So you're looking at technical stuff. You're looking at bars, you're looking at graphs. This is going up, this is going down. Meanwhile, these guys, they're not even looking at these things. They're just looking at fundamentals. So they're trying to look at business model. How is the business performing? How is the HR of the business? What are the unemployment rates, economic returns, and all that? There are some traders who have an investor mindset, and there are some investors who have a trader mindset. But it is important not to mix the two, because you can have a good opportunity. If you're a trader with an investor mindset, you can have a good opportunity. You take that opportunity, but the opportunity might be there and it goes. And instead of selling a thing, you're still holding to make a lot of money, because now you're thinking as an investor, and by the end of the day, you might lose. If you're an investor with a trader mindset, you might say, you invest in a stock today. A few months later, the stock loses value. It's losing. It's just losing. Now you're panicking. You sell that stock because you have a trader mindset. Meanwhile, investors need to have a strong mindset of holding over a long period of time before they make any significant returns. So these ones, they are more patient, they are more long-term focused. They don't really make a lot of money. That's why for people who are investors, they tend to have a lot of capital to risk. While traders, you make a lot of money, but things are happening quickly. So you make more, but you're also losing a lot. So you have to be able to be decisive on what you are and what you're doing on the market. You can be a trader on the financial markets, but an investor in real estate. That is good. Or you can be a trader on currencies, but you're investing in maybe some particular stock, something like that. Yeah, so basically, what should you invest? What should you trade? You pick. You just need to pick. Because the thing is, personally, the strategy that I use is universal. I've traded all the things. I've traded this, I've traded this, I've traded this, I've traded all these things with the same strategy. The strategy works. Strategies they work fine. But you, as a person, as an individual, you need to know the kind of person that you are. You need to know where you are lying here. And that is not something that I can tell you. Some of these things, they are more risky than others. Some of these things, they move faster than others. Example, Forex pairs, so currencies. When I talked about Euro USD in the previous videos, if you look at some of the Forex pairs, they don't really move that much. Let's say they are two different price points. Let's say 2000 USD and here 1000. You see Forex pairs, they just do this. They just move in between two points. So this might be challenging for some people, but this might be advantageous for some people. It's the same thing with indices. If you're looking at indices are not like this. They are not like Forex pairs. These things, they move far and they move quickly. Indices, they do this. So if you look at the chart of S&P 500, NASDAQ, you see that over time, they're doing this. It means that if you close your eyes and you buy an index, you look at it 2 years later, chances are that you'll make money. Do this with Forex. That money is gone. You're dead. Do that with cryptocurrency. It's you don't know, because cryptocurrencies can also do this and they can also do this. So you need to know the asset classes. You need to experiment with all of them and figure out what works for you. And then when you find the thing that's working with you, you stick to it. Personally, as I said, I've traded Forex, I've traded stocks, I've traded indices. I like this more than all these. Actually, if I could, I would be trading futures by now, because I like how they move. They move like this. So I like that. Whereby if you are correct, you're going to make a lot of money in a short space. If you're wrong, you realize that you're wrong very, very quickly. All right. So as I've said, this is a personal decision. I cannot do that for anyone. You have to decide on your own. Now, the issue on how to analyze, because I keep saying analyzing, studying charts and whatnot, you need to know how to analyze, and there are a couple of ways of doing it. You can look at economic factors, gross domestic product. You can study unemployment rates, interest rates, company profiles to make a decision on whether you should invest in something or not. Okay, so that is called fundamental analysis. This people who are doing stock trading, they typically do this. If you're investing in stocks, especially in Malawi or anywhere else, they study these things. They know exactly how many retail sales that month. They know the unemployment rate in that particular country. Or you can look at price and volume. So price will tell you whether something is likely going to go up or drop. On the trading view, I talked about time. I talked about that you can look at the minute, you can look at data on 1 minute, you can look at data on the daily. So those are called time frames. If you're looking at data at a very small space of time, let's say minutes. All right, so someone is asking if there's a difference between synthetic indices and currency pairs. Yes, there's a difference. Synthetic means fake. So if you hear anything that is called synthetic, that is a fake thing. Or I should say, maybe not fake, but it's generated. It's not tied to any real thing out there. Meanwhile, forex currency pairs, they are not synthetic, those are real. They are tied to actual currencies. So if you look at a chart of a currency pair and you're looking at the price is real, is not fake, it's real. While a synthetic pair, the prices are just crazy. You see crazy numbers there. I don't know if that answers your question, Manuel. Does it answer your question? Okay, so it's better to trade currencies, right? As I've said, that these things are different. It's not that I would not tell you that this is better than the other because everything is different. It depends on what you're trying to achieve. It depends whether you're trying to invest or whether you're trying to just trade. So if you're trading, you want to make money quickly. It also depends on how you're trading. Are you trading in a smaller time frame, on a higher time frame? Because I can say that currency pairs are better, but that is true for some people. For some people like me, currency pairs are terrible. But for others, currencies are good. So the point of this session is so that you know that you have to decide on what you want to do. I will not tell you what you should be trading. I spend a lot of time trading synthetic indices. These are indices, but they are fake by deriv. They work, you can make money, you can withdraw. But I do that because synthetic indices, they move very fast. So because I'm impatient, I need to see movements quickly. I need to make money fast. If I'm losing money, I need to lose the money fast so that I know how my day is going to be. That's it. Yeah, so it depends on the objective, like what you're trying to do, how you're doing it, and all that. There's no such thing as this is better than the other, because I know people who trade Bitcoin. I've never traded Bitcoin. Oh wait, I have traded Bitcoin. I had a good experience initially, then it was terrible, and since then I've never traded it again. But I'm shocked to find that other people out there are trading Bitcoin, and they are happy with it. Mango Asia, because for them it works. So you need to find what works for you and decide on what you'll be doing. But in order to find what works for you, you are going to have to experiment. That I cannot do for you. Okay, so technical analysis, depending on the time, if you're looking at very small time frames, um, you will be, so it can be like minutes, seconds to minutes to hours. So you enter a trade, you're out in minutes, you are probably scalping. So you'll be called a scalper. If you're holding a trade, maybe minutes to days, I mean minutes to hours, you're probably called an intraday trader, or commonly known as day traders, because they just hold a trade during the day. When the day ends, they close all the trades. Or you can be called a swing trader if you're holding trades overnight, a couple of days or weeks. But if you're holding trades months and years, then hey, you're a position trader. And this is almost, you're basically an investor, almost an investor, because you're trading like over months, even years. So again, whether you should be looking at the minute time frame, or you should be day trading, or you should be holding trades overnight, or whether you should be investing, it's entirely up to you. I've traded seconds, within seconds, I'm in and out. I've traded for hours, traded days. I've never held a trade for over a week, but it's all the same. The only difference is the kind of person you are and what is working for you. Because if you're trading on small time frames, things happen fast. You make a lot of money fast, or you can lose a lot of money fast. If you're trading on like days, you're holding weeks, days, everything is slow. Peace of mind, slow money, less chance of making mistakes and all that. So in order for you to make a decision on whether price is expensive, price is cheap, on whether price is about to go up, or whether something is about to drop, you need to have a technique. So some people, they use patterns, some people use supply and demand, something that I use. Yeah, others we use Wyckoff. If you don't know what these are, it's fine. This is something that you'll find on YouTube. ICT, volume profiles, and so many different three-letter word techniques out there. It's a terrible idea to try to study all these at the same time, but something that works for me, it's this. Others have found success trading volume profiles. Others have success trading patterns. So they just look at the patterns of what is happening. They look at the chart, they look at price, they say that price has done this, therefore, if price is doing this, then it's going to likely drop. So that is a pattern, like an M pattern or a double top or something. So finally, there are people who you can combine a hybrid of fundamental and technical. So the fundamentals giving you direction on overall long-term direction of the particular thing that you're trading or that you're investing. It's giving you the long-term version. Technical analysis will give you the immediate thing, what is happening. So if you combine these two, if the technicals are telling you that this particular thing is going to go up in price, the fundamentals telling you this thing will go up, the technical is also telling you this thing will go up, then you have a hybrid strategy, which is telling you that you should buy whatever that thing is. And if you buy that particular thing and it goes up to a certain point, you can sell that thing at a profit and you withdraw. That can happen in a matter of minutes. You can make $1,000 in a matter of minutes. The same $1,000 can be made in a matter of 1 hour, or it can be made in a matter of 1 week, or even 1 month. The same amount of money, the same technique, but just because of the time frame that you're looking at. So that is that. All right, I have already talked about TradingView, that is what I'm using for analysis. Talked about MetaTrader 5. There's also MetaTrader 4, but this is more advanced, better. That is what I use for execution of trades. There are other alternatives, but simplify your life, just use this. There's different brokers out there. There are different brokers. You have good ones like IC Markets. Apart from IC Markets, you have Paperstone. These are good ones. I think others use Exness and whatnot. But the one that I'm currently using is Deriv, and it's the one that I've shared the link on the group, and also it's the one that that is linked here. Deriv has been there for a long time. It's decent. I really have no issues with it per se. And then there's also Binance. So being trading in Malawi, at least you need these things, these 5 things. You need TradingView, you need MetaTrader, you need a broker, you need a Binance account. So that is how you're going to be able to fund and withdraw your money, because you will withdraw it as a crypto. I'll explain it in a bit. And then there's Forex Factory. So the fundamental analysis, this information, you're getting it from Forex Factory. There are lots of other places where you can get info, but Forex Factory is the easy one. Technical analysis, all this information, you're getting it from TradingView. So all the technical analysis, you're doing it on TV, TradingView. Fundamental analysis, the information, you're getting it from Forex Factory, FF. I've already shown you guys TradingView. So anyone who hasn't used Forex Factory before, anyone who hasn't used Forex Factory? All right. Let's see. Okay, so I'm just going on Forex Factory, forexfactory.com, I think. Okay, so if you go to Forex Factory, this is what you see. You see a lot of news there. And you have data from different currencies, Euro USD. So these are currencies, GBP USD, USD JVY, and what. You have the latest stories up here. They're showing up as they happen. You have hot stories. If you're someone who's into this, and then you have trading sessions actually down here. So if you remember when I talked about stock exchanges, I said that the stock exchanges are in different parts of the world. They open and they close at specific times. So right now, you see that the New York session, or the New York, is currently open, the New York Stock Exchange, but it's about to close soon, if not now, because it's 10, I think. It's 10 or 11. But yeah, so when you go to Forex Factory, you have a lot of news. You can study a lot of stuff. So you have forums where people discuss stuff. You have a tab where people talk about trades. You have the news, the actual news. All these are news. So people study all this stuff. So let's say someone who's interested in American stocks, they'll study these things, and then they'll have a bias to say that companies are likely to perform well, or currency, or companies are likely to decline in value. But normally, most traders will just go to Forex Factory and then we go to the calendar to look at news announcements. Because whenever there's a news announcement, there is usually significant price movements in the market. So you see that Forex Factory gives you the currencies which will be affected. So right now there is this is only high impact news. The reason why it's red is because this news is severe and it can cause significant market movements or market volatility. So if you click on the filter icon, you can choose whether you want to look at high impact, medium impact. The yellow is low impact. The gray is usually bank or non-economic news. So you can choose whatever event that you want to look at, whether it's growth, inflation, employment, housing, and then you apply the filter. So you see this. Now, today being a Saturday. So let's say let's say it's Wednesday. You see that on Wednesday, on Great British Pound pair, GBP, in Britain at 8 o'clock, there was news to do with the consumer price index, which is called CPI. So this is significant data, which was released at 8, I think it's 8 a.m., 8 a.m. So whenever the news is about to come out, they will give you a forecast. Now, if you look at here, you have an alert, you have a detail, and then you have a forecast. So there's an actual, there's a forecast, there's a previous. So the actual, it only pops up when the news has been released. The forecast tells you what the news will be, the likely forecast. So it means that the consumer price index forecast was at 3.3% before the news released. Previous announcement, I don't know when it was done, but the previous announcement gave a 3% figure. The focus was 3.3, and then the actual figure we got was a 3.3 percent consumer price index. You can click the folder and then you look at the history, you look at all these news right here. So people will read all these things and then they'll make a decision based on what has been happening in the past. They'll make a decision on what is likely to happen in the future to say that, okay, I'll buy, let's say, the Great British Pound pair, or maybe I'll buy the Great British Pound stock, the UK 100, and such things. So there are different strategies on how to analyze fundamentals. You can also study it, lots of data on YouTube. Other people will make you pay for it because this is very difficult stuff to understand. But over time, it becomes clear. So that's Forex Factory. I only use the calendar because I don't trade fundamentals. I just avoid to be in the market when that news is being announced. So I avoid having an open trade when news is being announced. So if I know that on Wednesday, GBP at 8 o'clock, there's significant news, I will not open a trade until the time goes beyond 8 a.m., maybe 9 or 10, when price has stabilized. All right, should move back to what I was discussing. All right, just a few slides remaining so far. Few slides, but some of the things are very technical, so this needs a bit of attention. Okay, so if you installed, I told you guys to install MetaTrader 5. After installing it, right, can I see anyone who has managed to install it successfully, either on the phone or on the computer, so that I see whether I should bother to go into this or not? Had two people, I think. 3, 4. All right. Okay, so this is a screenshot from MetaTrader 5. If you're someone who has installed it for the first time, I don't think this is what you're seeing when you open it. I suspect this is not what you're seeing. But anyway, before I go into this, I should go first into the brokerage thing. So the broker account with Deriv. So I should just show you how the broker works. So as I say, I have said that TradingView is for analysis. You just need your Google account to create an account with TradingView. MetaTrader, you don't need to create an account, but you need to have a brokerage account for you to log in to your MetaTrader 5. So that's why I want to show you the brokerage account. Now, if you have registered on Deriv, then let me just switch to Deriv now. Uh, all right, so this is Deriv. All right, so if you have registered on Deriv, you've managed to open an account, you should be able to see something like this. If you're using your laptop, it should look like this. If you're using your phone, maybe it might be a bit different. But anyway, so this is your brokerage account. You have Traders Hub, which is telling you right now what I'm in a demo. Click, it'll show demo or real. So my brokers, they give you access to fake accounts, which you can use to experiment on the different markets. So as I was telling you that you have to experiment, you don't experiment with real money, you experiment with broker, with fake accounts. So that's the demo. So I've gone to demo, and then you see that I have like 20,000 USD total assets. So if you look at the options that you have, above they've given you options, they've given you CFDs, and then you have different types of accounts. You can just choose the standard. You click get, and then it asks a password. When you put your password there, the password that you registered with, it will give you an account. So it will look like this. So the account that you get right here, when you click open, you see that it shows your broker, it shows your server, and then it shows your login ID. So this is what you're going to use when you go to MetaTrader 5 kucha. So when you go on the MetaTrader 5 and you just open it, on the left upper corner, usually you have like an option where you can click get started or something like that, get started or accounts. And then there's a plus icon, which when you click it, then it gives you like a search bar, which says it asks you to find your broker. So per broker, well, then you search the broker, which is Deriv here. So it's deriv.com. So if you do that, you're going to find that you get a lot of Deriv websites, Deriv, deriv.com, Deriv SVG, Deriv BFI, but you just use what you're seeing above. So right now, for me, I'm seeing deriv.com limited. It means that I only click Deriv.com Limited on MetaTrader 4. Passaver is Deriv demo. So on my MetaTrader 5, I'll put Deriv demo, and then I'll put my login ID, and then I'll put my password on MetaTrader. When I do that, then I'll be able to log in to my account, which right now has 10,000 USD of fake money. So that money is money that I can experiment on how to use MetaTrader, and how to buy shares, stocks, buying crypto, whatever. Because it will not really matter whether I'm losing or whether I'm gaining. By the end of the day, um, you're getting the skill. Okay, so that's how you link your brokerage account to your to your um to your trading view. Different brokers will have different methods or different systems on how to go about it, because so let's say you're using IC markets, it'll be a bit different. If you're using Paperstone, it'll be a bit different. Omano, by the end of the day, the concept is still the same. MetaTrader is just like a platform. And then you use your brokerage accounts to log into the MetaTrader 5 so that you have access to your funds. Binance is only there to help you fund, because right now Malawian banks are not working. You cannot fund your money into, you cannot make an online payment, and you cannot make a withdrawal for most banks right now, right? You need like pre-approvals and all that. So you need to use cryptocurrencies, Binance. All right, back to MetaTrader 5. So when you log in, you get something like this. These are just quotes. So this is just MetaTrader telling you prices of various things. Now, I talked about a symbol. I talked about asset classes. So under the asset classes, I said that you have symbols, which are also called instruments. These are the actual things that you're buying and selling. So like here you have US S&P 500. So this is an index. This is an index. You have BTC USD. So this is Bitcoin, basically. You have Euro USD. Bitcoin, a cryptocurrency. Euro USD is a currency. And then you have US oil, a commodity. So I just put different things so that you can have just have a picture that it doesn't matter what you're trading. They are all the same things. If you're using MetaTrader 5, the concept will still be the same. The strategies will be the same. What you're doing is you're just trying to buy something that's cheap and sell it when it's expensive, or sell something that is expensive so that you might buy it back at a cheap price to make money. So on YouTube, I think I talked about all these things, the ask price, bid price. So that's something that you can just go watch, because I will not repeat it now. We have a spread, we have the low of the day, high of the day. One of these is the bid price, one of it is the ask price. I've just forgotten which is which. And then we have the gain in that particular day, percentage change, time. It's just basic stuff. So very important, very, very, very important, because this has to do with risk management, how you manage your risk when you're trading. Risk management, very important. You need to know what a lot is, you need to know what leverage is, and you need to know what margin is. So a lot, you hear it a lot if you're doing financial trading, maga trading, you're going to hear a lot. A lot is a size of the trade, of your trade. Now this, it doesn't really matter, as I keep saying, whether you're on currencies, synthetic indices, you're on an index, you're just looking at the size of your trade. So how much quantity of the currency you're buying or selling, that's a lot. If you are doing my stocks or futures, if you're doing stocks or futures, it might be known as maybe a contract. So if you're trading one contract or you're buying one contract, you're buying one unit of a particular thing, two contracts, two unit of a particular thing. Easy example, this can be considered as 0.01 lot, okay, because it's like small. And then you have like Kabagi, proper size, which can be considered as 0.1 as a unit. So if it's 0.2, just think of these, comma, there should be two bags, another one here, 0.3 like that. And then one lot can be this whole thing. That is just a very simple illustration on lots. Another consideration that you must know is that if you're ordering potatoes at the market, right, one small bag is like 0.01 lot. This consider it as a medium bag and consider this as the big bag. So big, medium, small. Now, if you are someone who trades potatoes, that's your business. If the price of potatoes goes up, udaoda your potato order this quantity. If the price of potatoes go up and then you decide to sell it back to the market, you are not going to make a lot of money. You make a small profit. This one who has one big, huge bucket, or maybe who has one, two, three, let's say you bought 10 of these big potatoes. If the price of potatoes go up, even by a small bit, this one will make more money than this because of lots. So it's just that simple. However, if the price of potato goes down, then this one will lose less, this one will lose more. So as I said, very important because it really ties to risk management. So on your MetaTrader, whenever you're trading, you are given the option to choose your lot size. So normally they start from 0.01 and they can go up to, let's say, sometimes even 100. So that is the quantity. So if the thing is gaining and appreciating in value and you have a huge lot size, you can make a lot of money. I'm talking like growing a $5 to 200, 300, 400, very possible. If you're using a very tiny lot size, the market can move far, but you can only make like $10, 15. So it matters. However, if you have huge lot sizes, but the market goes slightly against you, then it can easily wipe out your account. So that's the issue of lots. We have leverage as the second thing. So this is the borrowed power from your broker for you to access a large trade with a small amount of money. So this is something that you must also know. The reason why I was recommending Deriv is that they give you a good leverage. So with $1, they can allow you to move like significant trade positions. As a good example, leverage is like you have a farm, you have 4 million kwacha in your bank account, and you have 1 acre of land. However, you go to the bank loans you for 40 million to your farm, and then 40 million each, you ended up buying more land. You buy 9 more acres to add to your 1 acre, and then you even rent a tractor. So now you have 10 acres of farmland. You're farming 10 acres. If you have a very good harvest out of these 10 acres, your profit will be up the roof. So that is leverage. You have leveraged the bank to access 10 acres. If you have a bad harvest, then you have a loss, but not only are you in a loss, you also have a debt to the bank. So that's something that you have to consider. In this particular case, the leverage is 1 to 10 because the bank is going to ask you how much money do you have in your bank account. They will look at your bank account to see how much money goes in and out of that account. So you can have 4 million, and then they'll tell you that with your 4 million, we can borrow you 40. So they're giving you 10 times more than what you have. So this is a 1 to 10 leverage. Forex trading brokers, they typically, the smallest that I see, it's like 1 to 100. That's the smallest. The decent ones, they go as much as 1 to 500. And then there are these sketchy ones, they'll just put a crazy figure, maybe 1 to 2,000, maybe 1 to 3,000. I don't even know how true it is, but this is usually decent because it means that if you have $10, let's say you have a broker that's giving you 1 to 100 leverage, and then you have $10, you can open a trade that has a value of over, let's say, 1,000 USD. So you can find that with $10 alone, you are able to make significant money. I've seen people make over 500 to $1,000 from $10. But as I've said, this issue, it also goes the other side, because if the market goes against you, even by the slightest, that money is gone. It's going to wipe it out. So that's on leverage. Now, the money that the bank needed to have to see you in your account, the 4 million, this 4 million is what is called as margin. So margin is the money that you must set aside to open a leverage trade. So in this particular case, this farmer needed to have 4 million in his bank account. If you have tried to apply for grants and all that, they might tell you that in order for us to give you this particular grant of, let's say, 30,000 USD, you must have, or you must provide this amount of figure. You must have this amount. So maybe they'll say that you must also provide 10,000. So this money is the margin that we're talking about. They need margin. The money that you put up front in your account so that they see it. So that is on leverage, lots, and margin. The combination of these three things can either make you a very good investor and trader or a very terrible one. If you're using the wrong lot sizes, you are overusing leverage, you're not considering margin, you can cry because you can lose $1,000 in 2 seconds, 10 seconds, 1 minute. If you're using these things well, then there's a good chance that you can be consistent. So as I've said, margin is the money you set aside to open a leverage trade. 4 million is the margin in this particular case. This is the margin. If you open a trade in MetaTrader using your demo account, it shows you, and you go to your history, it will show you your margin. Actually, it will show you your balance, and then it will show, I think it's equity first, and then it will show you your balance, and then it shows you, I think, margin or something. And then after margin, you might have margin percentages, something like that. So the margin is always static. So you just know that if your equity falls to that margin, the equity being the money in your account, floating. So if your equity falls to your margin, that trade gets closed automatically. You get a margin call. So the broker will alert you that the money that you have in your trading account is smaller to hold an open trade. So they'll close the trade for you at a loss automatically. All right. So now issues of brokers. So as I've said, I've talked about derivatives markets and Pepperstone and all that. Those are brokers that will help you access the global financial markets. So these are the global ones. Okay, if you want to participate globally, but in Malawi, you don't have a global broker. No, none. They just operate in Malawi from outside. So you can access deriv, you can use, I think it's Templar or something, World Trade. Those are also other brokers, which I don't like, but they are not really Malawian, I would say. But you do have stockbrokers in Malawi. So we have 3 of them. I think, yeah, we have 3 of them. Stockbrokers Malawi Limited, CDH, and Yeah, that. These ones, they'll give you access to trade the Malawian stock exchange. These ones will not give you access to trade the other global markets. They will not. You cannot buy shares, uh, Facebook and all that with these ones, no. And also, as you know, for people who have tried opening an account with these brokers, it's hectic. If you use the link that I sent with Derek, you can do it within 5 minutes. These guys will take you weeks, okay, to if you're lucky. So, yeah, these are, I think, yeah, these are some of the brokers. They are not the only ones. There are so many brokers. There are literally hundreds and hundreds of them, good ones. It's just that these are the ones that I know from the top of my head. I'm not sure if this is the correct spelling. But anyway, when choosing a broker, you need to have the skill to determine whether they are legit or not. Now, legit things, they are regulated. It's just that simple. Regulated things are likely to be legit. Now, the regulating body, it has to be a significant one. For example, Malawian brokers, these ones, they are regulated by the Reserve Bank of Malawi. That's the regulator, Reserve Bank of Malawi. I know the Reserve Bank of Malawi is legit. It's a legit structure. So I'm safe. You can invest with them, no problem. But these brokers will operate at the standard of the Reserve Bank of Malawi. And then there are some brokers which are regulated by, in America, by the, I think it's called financials. There's an institution in America which regulates all financial institutions there. So that financial institution is strict, and you know that if a broker is regulated by them, that broker is unlikely going to be doing any shady businesses. Meanwhile, there's some brokers which you're not going to know where they're coming from, who is regulating them. They're just there. They'll tell you that when you deposit, you get 200% bonuses, refer, all these other crazy things. So those ones, they may do sketchy businesses whereby you put money in, you fail to withdraw, you try to trade, they will not execute, you get taken out of trades quickly, so many crazy things. So you need to know whether they are legit or not. These ones are legit, so I would stand by these. Also, you need to know the deposit and withdrawal methods. Make sure that they accept crypto. This is important because of where we are. Last year, we could have we would deposit and withdraw using our Visa cards, but right now these things are no longer working. When you go to the bank, they'll just tell you that submit your invoice and whatnot to activate, but they don't really ever do that. If you're lucky, some Visa cards are working, but most of them are not. So make sure that they accept crypto withdrawals. This one goes back to your Binance, and then from your Binance, it goes to your account. And then there's an issue of trading cost. Every broker needs to make money, and they make money mostly from these three things. They need to charge commission for every trade that you're opening. If they're not charging commission, they will put crazy spreads. If not crazy spreads, they'll put a crazy swap. So a commission is the money that they charge per lot that you open, per lot. So this is per lot. The spread is the difference between the price that you want to buy against the price that the next seller is selling, or the difference between the price that you want to sell and the price that the next buyer wants to buy. So if you're selling something at 100 kwacha, a broker is going to buy that thing. I mean, the broker will facilitate the transaction. You'll end up selling it at 95 kwacha. And then the buyer of that particular thing is not going to buy it at 95 kwacha. They'll be quoted maybe at 105 kwacha. So you see that there's a 10 kwacha differences that they have made from both sides of the deal. The swap is basically the price that you pay for holding a trade overnight. So there's that. Now, the other thing is issues of leverage. I've told you that good brokers, at least minimum, should be 1 to 100, actually 1 to 200. It can go as high as they want. Margin requirements, minimum deposit amounts. For most Malawians, we like maybe $10, but honestly, you're not going to make significant money depositing $10, but it's just good to have experience with it. Some brokers will even allow as small as $1 deposit. Yeah, so that is an issue on brokers. The stock brokers that we have in Malawi, I've never really studied them, but if you study them well, you're going to find that these things also matter. Deposit and withdrawal methods, which banks are they accepting, which banks do you have to deposit? You have to ask, you have to check their commission, you have to check whether if you want to buy a FT share at 24 kwacha, will you buy it at 24 kwacha or will you buy it at 27 kwacha or 28? And when you're selling, those things, are you getting charged swap and all those things? Your minimum deposit amounts. So they'll tell you that as Malawian brokers, we accept maybe a minimum of 5,000. So that is good because you can still participate. All right, I talked about deriv. Just wanted to do a walkthrough, but I've showed you that already. So by the end of the day, the most important thing is that you should get the skill on how to trade, understand the skill, and then you can seek this, get the money. So to get the skill, you need mentorships. So you can either do it for free, you will have zero financial barriers. You will have lots of free content. I've told you that if you join the Telegram link that I have, there is tons and tons and tons of stuff there. And it is self-paced. You can learn in 1 month, 1 year, 10 years. No one really cares. Plus, because you're getting exposed to so many different things, you have a wide range of perspective. You will not be narrowed down to one thing. Especially as a beginner, you should not be narrowed down to one thing. You have to, you need to have an overarching view of over everything, and then you can decide. However, disadvantages is that you will likely get confused. Inconsistent information will make you inconsistent. There is no structure at all. So you will be very slow at your learning, and you will have a high exposure to misinformation and no feedback from anyone. No one will tell you that, no, this is wrong, you're wasting time with this. No one. Or you can find people who are actually offering teaching stuff. So there are some people who don't teach at all. They just trade. They are bad teachers. They are there. And then there are some people who trade, but they are good teachers to an extent. And then there are some people who don't trade, but they are good teachers. Those are three different experiences. And I cannot give you a conclusion as to what is the best thing, but it's good to just learn from someone else's experience, someone who has done it before, someone who's doing something that you want. Advantages is that you will have structured learning, a faster learning curve, and you will get feedback as well as correction, accountability, and all that. Disadvantage, yeah, you will have high cost. So you will get charged. If you're lucky, someone might teach you for free. If you're lucky, might guide you, might hold your hand if you're lucky. Some of us, we have never had that, such kind of individuals. But if you're lucky, yes. Another disadvantage is that quality would be different between different teachers. So some people will be good at teaching technical analysis. Some people will be good at teaching you risk management. Some people will be good at teaching you psychology. It will just be like that. And there's no going around it. So when you pay someone to teach you, you are stuck to whatever strength that they have. That's why it is important to learn from someone whom you admire. You want to get the thing that they have. Otherwise, they will not be able to give you something that they don't have. So learn what you can from someone. If you have to move on, it's good to move on to the next thing. And also the other problem is that there's no strategy that fits everyone. The way that I trade, I can teach someone, they'll be profitable. And I can teach another person exact same thing and they'll be failing back to back. It's not because of the strategy or me. The only issue is that there's no strategy that fits with everyone. Some people are too patient, some people are too impatient, while others they like patience, they like things slow. So that will not work with how I trade. So yeah, another thing now it's basically scams and overhyped promises. So these are people that will tell you that you'll be making millions in weeks or in a month. Not going to happen. Maybe it might happen by chance, but you're going to lose that money because it is possible to make a million in a day or in a minute, but you will lose it because you don't have this. So people who don't have skills will always lose what they gain. All right, so now we've talked about getting the money because we've discussed how to save. We've talked about mechanics of money and now deposit and withdrawals. Um, this is what we used to do. We used to do bank transfers, but now they are no longer functional. Visa cards, they don't work. Airtel Money and Bamba, I think that works with Templar. This is a broker. There's another one which I don't remember. Cryptocurrencies, they work. So you can deposit USDT, USDC, BTC to Deriv. So you can deposit. However, you need to find the USDT in the first place. So that is another thing altogether. So in normal countries, you just fund your account with your Visa card to your Deriv, and then from Deriv, you go to MetaTrader 5, you use your skill on TradingView to make an analysis, you make your money, you withdraw money from your Deriv to your bank account. But this doesn't happen here anymore. So here you have to use cryptocurrency. So first of all, you need to find cryptocurrency. Find someone who's selling cryptocurrency. Um, this can be the commonest is USDT. If you find someone who's selling cryptocurrency, personally, there's a have a I'm working on a platform. It's an application that you can buy cryptocurrencies safely. But there are a lot of people who sell, they buy and sell these things out there. Just make sure that you're not scammed and don't do it online with someone who you don't know. But if you really want to get it, it can help you get it proper. And then you fund your cryptocurrency that you've got to your Binance. So when you're buying cryptocurrency, it goes to your Binance. And then from your Binance, you transfer it to your broker, which is Deriv. And then from Deriv, you put it to MetaTrader 5. And then after you trade, you make money. You withdraw the money from your broker, from Deriv, to your Binance. So this should be Binance. And then from Binance, you have to find a buyer of that crypto for you to withdraw. So there are a lot of buyers. People will buy you. Normally, right now, I think the rate is around 3,900 per USDT, which is usually equivalent to one USD, one US dollar. So whatever dollar amount you make trading, if you make, let's say, $100, it's 100 times this. So that's around 390,000. And then the person who you're selling the crypto, they'll send you the money first, and then you send it to them. All right, so I'm done. Conclusion, there's a lot of money, but you need skills. If you need to access the stuff that I have, you can use this link. I can share it on the group. There are a lot of free stuff, a lot of PDFs, a lot of links. And if you want me to teach, this is what I charge for a period of 1 year. For a period of 1 year, and then afterwards, I just let you be. If you're serious, you still continue to learn. If you're not, mark out at that time. Yeah, so that is the end of the session. I didn't want to do this again, just wanted to do this in one go. So finally done. Any questions or comments or anything that you might need to know? For the few that are remaining, I am guessing some have already slept.
Hello.
Yes, can hear you.
I didn't understand on swaps.
Oh, swap is the money. It's the cost of holding a trade overnight. So it is the money that you pay to your broker for holding a trade over the night or the weekend. So it can be overnight or over the weekend. So this one, it usually applies to people who are investing or people who are holding trades over the night or weekend because they get charged a certain figure.
Okay, thank you so much.
Yeah, sure. Share the needed details for the online resources and your email address. I'll just post, it's a Telegram link. I'll just post it on the group after this. So when you go on the Telegram, you can just go to resources. You see a lot of PDFs. Now, there are a lot of PDFs for a reason. Don't try to read everything. Just find one thing that makes sense to you and stick to that. Any All right, great. Then have a good night. I really do hope that you make an effort to learn these things because these things are not easy. As I keep saying, these things are hard. It's like you're learning a new technical skill and it will take years at minimum, at least, maybe minimum 6 months, I should say. So all the best. Find someone to learn from. If you do it alone, you struggle.
Thank you, boss.
Yeah, it's just once off payment.